Hello everyone, welcome back to the channel. Today, we are discussing two of the most talked about assets in the financial world, gold and Bitcoin. We'll start with gold, the traditional king of wealth preservation, and then move on to Bitcoin, the digital asset that has transformed modern investing. For thousands of years, gold has been one of the most valuable assets on Earth. Ancient civilizations used it as money. Rulers stored it as wealth. And even today, central banks around the world hold massive gold reserves. But what makes gold so special? The answer is simple: trust. Gold has maintained value throughout history. It has survived economic crises, wars, inflation, and market crashes. Whenever uncertainty increases, investors often rush toward gold because it is viewed as a safe haven asset. One major advantage of gold is its stability. While stock markets and cryptocurrencies can experience huge swings, gold usually moves more gradually. This makes it attractive for people who want to protect their wealth rather than take excessive risks. Another reason investors like gold is inflation protection. When the purchasing power of paper currencies decreases, gold often becomes more valuable. That's why many people buy gold during periods of rising inflation. Gold is also a globally recognized asset. Whether you're in Asia, Europe, America, or the Middle East, gold has value. It doesn't depend on a single government or company. In recent years, demand for gold has remained strong. Central banks continue buying gold to diversify their reserves. Investors use gold as a hedge against economic uncertainty. And jewelry demand remains high in many countries. However, gold is not perfect. Gold doesn't generate income. Unlike stocks that may pay dividends, gold simply sits in storage. It can also be costly to store and insure. And while gold preserves wealth, it usually doesn't create life-changing returns in short periods. For example, if gold rises 10% or 15% in a year, investors may consider that a strong performance. Gold is generally about stability and preservation rather than explosive growth. Now let's compare that with Bitcoin. Bitcoin entered the world in 2009 and introduced something completely new: digital scarcity. Unlike traditional currencies that governments can print, Bitcoin has a maximum supply of only 21 million coins. This limited supply is one reason why many people call Bitcoin digital gold. Bitcoin operates on blockchain technology, a decentralized system that records transactions securely without needing a central authority. When Bitcoin was first introduced, very few people understood its potential. Some investors bought Bitcoin for just a few dollars. Over time, adoption increased. Institutions became involved, and Bitcoin grew into one of the world's largest financial assets. What attracts investors to Bitcoin? The biggest reason is growth potential. Bitcoin has delivered returns that traditional assets rarely achieve. While gold focuses on preserving wealth, Bitcoin has often focused on creating wealth through rapid appreciation. Another advantage is portability. You can transfer millions of dollars worth of Bitcoin across borders within minutes. There is no need to move physical bars of gold or rely on traditional banking systems. Bitcoin is also available 24 hours a day, 7 days a week. Unlike traditional markets that close during evenings or weekends, Bitcoin trading never stops. Supporters believe Bitcoin could become an important part of the future financial system. They see it as a hedge against inflation and currency devaluation. But Bitcoin also carries significant risks. Its volatility is much higher than gold's. Bitcoin prices can rise dramatically in a short period, but they can also fall sharply. This volatility can create opportunities for investors, but it can also cause large losses. Regulation is another challenge. Governments around the world continue developing cryptocurrency policies. New regulations can influence market sentiment and price movements. Security is equally important. Investors must protect their digital wallets and private keys. Unlike a bank account, losing access to a Bitcoin wallet can mean losing funds permanently. So which is better, gold or Bitcoin? The answer depends on your goals. If your priority is safety, stability, and long-term wealth preservation, gold may be the better choice. If your priority is growth and you're willing to accept higher risk, Bitcoin may offer greater potential rewards. Many investors choose not to pick one over the other. Instead, They combine both assets in their portfolios. Gold can provide stability during uncertain times, while Bitcoin can offer exposure to future growth. Gold represents thousands of years of trust and reliability. Bitcoin represents innovation, technology, and the future of digital finance. Both assets have unique strengths, and both continue attracting investors worldwide. As global economies evolve, inflation concerns continue, and technology advances, gold and Bitcoin are likely to remain important topics for investors. Whether you prefer the timeless value of gold or the revolutionary potential of Bitcoin, understanding both assets is essential in today's financial world. Thank you for watching. If you enjoyed this video, don't forget to like, subscribe, and share. And here's today's question. If you could invest only in one asset for the next 5 years, would you choose gold or Bitcoin? Let us know in the comments below. See you in the next video.